Welcome back to ASX Market Watch. Thanks for coming back and joining me for another time, checking out the markets, checking out where all the world indices are heading, and consequently where we should be trading or which direction we should be trading in if we believe that 3 out of 4 stocks are to follow the overall market. I'm looking at 3 today, looking at the All Ordinaries in Australia. I'm looking at the All Ordinaries because I've actually got more data back over history for this one. So I previously looked at the ASX Top 200, but this one, we've got a few more instances of broadening tops and just exactly what to look out for, because a few people have asked. Thanks everyone for your emails, by the way. And the Dow Jones I'm looking at, and the FTSE as well. So these two here should be really good. But the first one, of course, checking out the ASX All Ordinaries. And again, thanks heaps for stopping by. So really, where did we kick off last week? Amazingly, the market has pretty much done exactly what we were expecting it to do, which is this broadening top formation. Now, this broadening top formation, as you can see, it's got higher peaks, but it's also got lower troughs. So what this is doing is it's not making consistently higher peaks and higher troughs or lower peaks and lower troughs. It's actually going in both directions. And what's actually happened is it has burst through the bottom of this broadening wedge formation. Now, in the last couple of ASX market watches, we were expecting this to happen, and what we were expecting to happen is for it to actually tank and actually sort of go right through that in a quick motion, which it has been doing. After that, what we expected, and this is yet to happen, is for the market to overcorrect to the upside again. So time will tell if this actually happens. But one thing, well, first of all, let's check out a few of these broadening tops over history, just really quickly, because the last one we had was in August 2007. Now, August 2007 was the start of the credit crisis. We had this broadening top. The market tanked all the way down through the bottom of the wedge and then overcorrected back to the upside, and then we had the bear market of 2008. Now, there was one before this, which is 2001. This was a bigger one, so this was a nice, massive broadening top formation here. Now, as I said in my last market watch, it wasn't as pretty as the other ones, but it still was a broadening top nonetheless. Now, we had this broadening top formation. Market tanked through the bottom of the wedge there, then overcorrected back to the upside, and then had a bear market. Now, there was one before this, and I'm not sure if these words will mean anything to you. They should do if you've been investing for any amount of time. Long-term capital management. The long-term capital management crash in 1997, in October there. Check this out. Before we had it, this beautiful broadening top formation, this is in 1997, market went all the way down through the bottom of the wedge and then overcorrected back to the upside. Now, it wasn't... now, incidentally as well, it did have a sort of a mini bear market after that as well. So, I mean, in all instances I've found of these broadening tops, we've gone straight through the bottom, overcorrected to the upside, and then had a bear market or a mini bear market. And so that's basically what I'm expecting in the Australian markets at the moment. Even though a lot of that has not happened yet, that is what I'm expecting to happen. So yeah, long-term capital management, that was a great one in 1997. That was fantastic. Now, what do we look for the market to... When do we know when it's going to turn? Because obviously, we know that the market is falling. Obviously, anyone can see that at the moment. But what do we look out for when the market stops falling and actually reverses? Now, what I will show you here is a 1-bar reversal pattern. What we're looking at is, this is in August 2007. This is the single bar that moved the market. So we've tanked through the bottom of the broadening wedge, and then what's actually happened, this single bar, it's gone all the way down. It's quite a long bar, so like a lot of selling, like a bit of a panic, in all honesty. Bit of a panic, but then over the course of the day, if you can see, I'll just try and enlarge that a little bit more as well. There we go. The market has come back up and closed on its highs, or at least in the top half of the bar. Now, since then, what you can actually do is set your entry at the top of that bar, and you can set your stop loss at the bottom of the bar. Now, that will give you like a fairly low risk entry usually. What that means is that there's not too much room between your entry and your stop loss, so you can actually buy more shares for the same amount of risk. I hope that makes sense. It should do. If it doesn't, check out my free course on asxmarketwatch.com. It explains it all there. But yeah, so that's one way that you can actually do it. And as you can see, when price went through the top of that bar, it didn't look back. It kept going upwards. If we wanted to look back further, now of course we had our stop loss in place just in case it did look back, but in that case it definitely didn't. So back in 2001, what were we looking out for in 2001? These are our single bars here as well. Oh, I'll just get rid of this box here. There we go. What we're looking for, look at these two bars. It actually had two single bars, and both of them had long tails with a high close. So it closed up in the top half of the bar. Now, the first one, we could have put our entry at the top of the bar and our stop loss at the bottom. But of course, price didn't go through that bar. It actually went down for another day, and it formed another one of these bars. So we've got our entry there at the top of that bar, exit at the bottom of that bar. And again, a fairly low risk entry. If you were to look at that as a risk to reward, and the market going up from there, that's a big risk to reward. That's like 1, 2, 3, 4, 5. That's at least 7 to 8 times you would have made for what you risked, which is a fantastic trade. And that's what I'm looking out for at the moment. Again, one last thing, if we were to go back further, even further still, to that 1997 fateful day of long-term capital management, what we're looking at here, again, is a single bar that changes the market. Again, it's a really long-tailed bar. This one didn't close up in its top half. However, it did... There it is there. However, the very next day, it did close back up on the highs of the previous bar. So again, you could have set your stop entry at the top of the bar and your stop loss at the bottom of the bar. A really good way to have an entry signal. That's just one of the many ways, of course, that you can enter and exit the market. But that's, it's a good way to do it. So I hope that helps on the All Ordinaries. Really, I don't know exactly where the market is going to stop falling. You can look at price retracements, which if we were to do that from the entire bull run that we've had in 2009, the 50% retracement, which is the strongest one, it currently is at 4,050. So the market, that would be the strongest level of support for the market at the moment. We've currently bounced off the 38.2. Which is a Fibonacci retracement. What that is that's just Fibonacci, which you will tend to find support at these Fibonacci numbers or Fibonacci levels. So that's one way that you can check it out as well. So market's currently bounced off that at the moment, and also just to let you know, we have currently had that single day bar pattern. If I just get rid of that as well, there we go. So this is our single bar pattern currently. So this could be the opportunity that we're looking for. As you can see, it started high. It's gone down. It hasn't gone down as far as I would have liked, to be honest. However, it still has gone down a fair bit, and it's also closed back on its highs, and it's also on fairly high volume as well. So it was about 2.5 billion worth traded over the course of the day, which is, that says to me that either there's a lot of selling going on or a lot of buyers have come back into the market just over the course of the day to push the market back up to its highs. So you could look at setting your entry at the top and your stop loss at the bottom. Of course, you would want to get your stop loss to break even as quickly as possible once the trade evolves and emerges, and hopefully, because obviously I don't have my crystal ball with me at the moment, but if the trade does turn out well, then obviously you've got your stop loss at break even. It's a free trade, and hopefully the market will continue upwards. Hope that helps on the ASX All Ordinaries, guys. It's a really great market at the moment. If you have any questions, shoot by the website. It's www.asxmarketwatch.com. The link's down below as well. Just check it out. It's got a free course on there, and I do updates throughout the week as well sometimes, just to see what I'm buying and selling, and a few other details there as well. It's just good stuff. If you're interested in the markets, check it out. It's good fun. Other than that, guys, happy trading this week. Hope everything goes well, and I'll see you next week. All right, bye now.